Welcome back, traders. Earnings are to stocks and the indices what central bank activity is to the dollar and the currencies. In other words, things are about to heat up here this week, big time. Traders, it all starts tomorrow with the Bank of Japan. Tuesday, the beginning of the FOMC meeting, and then they'll announce Wednesday, and you've got Bank of England on Thursday the 2nd. For more on what to watch and what to expect, let's bring in Alan Nuckman, the Chief Market Strategist at Agora Financial. Welcome to the show, Alan. Central bank activity. Talk to me, my man, what it is, what it will be, and what should we be on the lookout for?
Well, I really think they're going to raise rates, Bank of England, more symbolically than anything. So it's going to be a quarter point. But let's talk about how low the rates are around the world. Once you think about that, I mean, you've got these guys bumping it up, and they're still below 1%. You've got Bank of Japan massaging, their rate structure to try and see if it's going to, the 10-year is going to get above 0%. So. Even though our rates are low, there are a lot of countries around the world that have rates much, much lower than we do right now.
So, expectations for Bank of England, you mentioned you're expecting a hike there. How about Bank of Japan? Because there's been a lot of focus on that circulating. Not so much the hike potential, but more some sort of a tweak or change to their policy.
Yeah, that looks like that's going to happen. If you look at the action in the yen right now, we've bottomed out and we're a little bit above the 90 level, looking at the futures anyway. So you've seen a lot of sideways action in the currency markets here recently. And that's really been the story for a lot of markets. We're just consolidating right now, waiting for the next move. So as a technician, you and I would both probably agree that most times it's just a continuation of the overall trend. So we'll have to wait and see what that breakout is. But since we talked last Monday, we have not seen new highs in the dollar. So that's a big deal. We talked about that key reversal, that weekly key reversal that we had the week before with new all-time highs and a lower weekly close. So that's still intact. Yeah. So that's very important from here on out.
Yeah, and then with the central bank potential to see some movement here, possibly a breakout out of that 93, 95 area. But Alan, I'm not an economist, but a lot of people are starting to talk about and the focus being on this end of the cycle. Where does all this come from? I mean, what does it mean for us as currency traders? And ultimately, it's just a guessing game, right? Because nobody actually knows how long this cycle is going to last, correct?
Exactly, and cycles can last a lot longer than what you think. So what common sense, dictates. So it's just like high and low. It's relative. So yes, we have had a long expansion here in America, but that doesn't mean it can't continue for a longer period of time. If you do the math and where we stand right now, the S&P could double in 5 years if we just achieve 14.5% return in the next 5 years. So. I wouldn't be one to say that couldn't happen. Anything can happen, as we've learned in the last few years. Anything can happen in the markets. But right now, I'm just waiting for the next move to give us a little indication where we're going. When we talked last week, it was strange because the Treasury markets had gone absolutely sideways for a month. And then after we got off the air, about an hour later, we finally saw a breakout in the Treasury, something that hadn't happened in a long time. And if you look in the bigger picture, we're still trading within a range there as well. But we did have some movement after being in a 15, 16 tick range for 3 weeks, nearly a month.
Yeah, it was actually an interesting week as far as treasuries because they also had that kind of unusual influence, I think it was, recently from Trump and the comments related to higher rates. But I'm wondering because we saw kind of a similar situation last week with a lot of the CEOs of America commenting on the higher dollar. I'm wondering, is this their sort of kind of tongue-in-cheek way of kind of sending their own message to the Fed that they don't necessarily want to see higher rates?
Well, I think so, but I think the dollar's gotten ahead of itself, in my opinion, and I've been looking for it to slow down, and now it looks like it has. So I think 2018 we had a little bit of short covering after the straight down in 2017. But a lot of times when you're talking about the CEOs and the guidance after earnings, they're a little bit behind as far as they're not really projecting what they think is going to happen. They're usually complaining about something that's already happened, and some companies have been hurt by that stronger dollar. But I think as the dollar stops going higher, that could be very helpful to a lot of the conglomerates, obviously, that do a lot of their sales overseas. So I think they should have some relief here in the near term if and when this dollar drive is over.
Okay, well, that was the other thing that I'm sort of wondering, Alan. You just kind of touched on it there a moment ago. Is we heard about the EU, the U.S. deal last week, and I'm kind of wondering, I guess, is which of the two currencies has potential to benefit more from or any of the currencies potentially for that matter, has potential to benefit more from trade concerns being resolved?
That's interesting. And again, I would have to go to the price action. If you look at the euro currency, the euro is in a range between 116 and 118 for 3 weeks.
Yeah.
Again, just consolidating right now. I think there's more upside potential in the euro currency. From a trader standpoint, I'd rather be a buyer and look to see if we can get up to that 120 level and shake things up a little bit, because you've got a pretty large position, of market players being still long this dollar, waiting for the next little leg up. So if it heads back down, it could shake it up a little bit, and you could see that euro get back to that 120 level, and we could see some good action if we can push that one more time.
All right, so what's the level to watch here in the dollar now? Is it that 93, 93.50 area that we need to keep an eye on? Okay.
Exactly. So 93, and so we're just looking at numbers, and what we have to do is see how the markets react once we get there, and that'll give us a lot of clues. But you're looking at 120. Well, first we have to break above 118 in the euro currency, and then you're looking at the 120 as an important pivot in the bigger picture. We've been trading, we dropped from 125 down to 115, so that's kind of the halfway mark there. But the dollar index, you're exactly right with that 93. So we'll have to wait. We'll have to wait and see. But I've been talking about this dollar for the longest time, and it could really be a big catalyst now that earnings seasons, we're to the halfway point, for that in the marketplace. I think that could be the next big focus, is the dollar for the next couple of months, if and when it can make a break.
Yeah, I completely agree. And with all the financial focus that we've had in the last couple months here, I don't think things are going to change. Certainly, heavy economic week headed our way, Alan. Big week as far as central bank activity. Really appreciate you coming down to help us take a look and kind of make sense of it all. Much appreciated, Alan. Thanks very much. That's Alan Nuckman joining us from Agora Finance.